Hello everyone, it's me. Hello everyone, it's me, NYSE Einstein, from the Florida New York Stock Exchange, inside Versthof. April 3rd, Tuesday. Stop the madness. Market got decimated yesterday over the complete fracture of the tech sector, the attack of the president on Jeff Bezos and Amazon, the uncertainty and lack of trust in Facebook, the complete rotation out of tech, selling and breaking the market. Felt like the narrative changed, found the fundamentals didn't seem that much to change. The market started to seem like it was breaking, it was cracking, it broke through the 200-day moving average like a hot knife through butter and did not bounce back. Then, if you don't like the weather, just wait a minute. What happened today? We came back in, market rallied strong. Basically, there are people who are sitting around with shopping lists. There are people who are willing to play the technical game, not the tech game, the technical trading game, the graphic points where there's point of support, resistance, and whatnot. People felt we were oversold in tech and in the market itself. They started to buy the market. It was a significant buy rally. Market opened up and rallied back. We actually opened up about 100. Sold down. I think it hit another point of support and then bounced back. People were basically sitting around trying to grab some stock. At least, you know, the market did not follow through with any fear. It did not follow through with any huge sell side. There's so much room to sell this market. If they really wanted to sell it, as they did, when we were down 400 and down 700, that was significant. Still, yet again, no follow through on that one. When they want to sell them, there's room to sell them. These are emotional headline driven sell sides. This is some profit taking. This is rotation out of tech and basically cracking the market in a big way. But we are catching a bid. We caught a bid this morning. Market rallied up 100, stayed positive most of the day. Felt like people were chipping away. We caught a bid. Buyers came back into the market. There wasn't big fear in the market that rode was the overriding factor in the market. It was more a buy positive posture. Midday, we were up about 200 and change. The imbalances came in, felt sellish. People were thinking that, you know, at the end of the day, we still have a wild card coming out of Washington. We still see some weakness in the tech sector. It's not that oversold. The headlines are volatile. The headlines are temperamental. There's still a lot of chatter. There's still tariffs. There's trade wars. There's still China. There's a lot of hair on this trade, and the path of least resistance seems to be down, and the market sort of fell off a cliff. Sure, as I'm standing here, ladies and gentlemen, we hit a bottom. We went from up 230 points to up about 60. News came out of the White House that the White House is not going to take action against Jeff Bezos or Amazon. I mean, come on, right? Who's playing that game? Whose car is bigger? Whose whatever is bigger? Anyway, market rallied hard, went from up 60 points to up 500 points, ended up closing up 390 points. A lot of green in the game. Russell rebounded big, up 20. The S&P rebounded big, up 35. Oil up 63.5, solid. Gold off 10, not significant. Transport's up 200. Plenty of green in the market. Plenty of rebound in this market. Plenty of buy-side momentum back in the game. So as I'm seeing it and I'm analyzing it, I'm seeing that this market is being driven by the fear of tech, the fear of the wild card out of White House, and the fear of headlines. And as is that causing it to go negative when it happens, and the robots are involved, and the algos get involved, and the people start trying to buy everything they can, and a bit of a short cover for people who are leaning on the market, this market can rally back just as hard as it can sell off. Keep in mind, that's the way the game, the cookie crumbles. Besides that, Spotify goes public. First direct listing ever. No banker. Banker advisors, no banker. No syndicate. Very special. Came out at $132, opened up at $100, and $65.90 ran up to $168, down to $149. It was a new deal. No track record on these direct listings. It was calm and orderly at all levels. It opened at a premium, seemed significant, seemed like it was a solid interest in the stock. Closed up from the reference price, down from the highest price. It's a business model. It still doesn't make any money. It's questionable, but as a new direct listing, not something I would recommend to anybody. It was smooth, it was orderly, it was transparent. The advisors did what they should. The market makers did what they should. The brokers in the crowd did what they should. Everyone did. It was solid. It was orderly. It was awesome. You could have made some money. You could have lost a little bit of money. At the end of the day, though, the information got out. It was transparent and orderly. I love you all. NYC Einstein. See you tomorrow.